Welcome to the Deep Dive. This is where we take a whole stack of sources and really unpack what you need to know. Today, we're diving into the critical world of cybersecurity, specifically for financial institutions. I mean, just think about it. Banking's digital transformation means almost everything, nearly all transactions, happen online now. So securing the data behind all that isn't just important, it's absolutely paramount.
And the threat level, it's intense, it's escalating constantly. This is something that genuinely keeps bank leaders up at night. We saw these reports where the CEO of HSBC UK actually told a Commons committee it does exactly that for him. Experts aren't really asking if businesses will get hit anymore. It's more like when.
Right, which just underscores the incredibly high stakes we're talking about here.
Yeah.
Financial institutions, they're a frequent target, a really high-value one. The sources we look through really highlight this. They show financial firms lose significantly more per data breach. It averages around $6.808 million for them compared to the global average of, $4.8 million?
Yeah, that's like a 25% jump. It's substantial. So for this deep dive, we've pulled together source material covering, pretty much the entire landscape of financial cybersecurity. We'll look at the regulations shaping it, the evolving threats these institutions face, the real-world challenges in actually building effective defenses, and, of course, the strategies banks are actively using. Our mission here is really to distill the most important knowledge and insights from all these sources just for you so you can understand what safeguarding financial institutions really looks like heading into 2025.
Okay, great. So let's start with that core question. Why does all this matter so deeply, especially in finance?
Well, okay. At the most fundamental level, these regulations, they exist to defend consumers and the organizations themselves, right, from threats, from breaches. But the consequences of security failures in this sector are particularly severe. They're really far-reaching.
It's not just about the immediate disruption then, is it?
Oh, absolutely not. No. The sources detail significant financial losses that go way beyond just potential ransom payments. You've got the massive costs of business disruption, the complex efforts needed for recovery, legal fees, regulatory fines. It all adds up. And if you zoom out the global cost of cybercrime, it was expected to hit a staggering $9.5 trillion in 2024 alone. And you can bet finance bears a really significant chunk of that.
Wow. And if a bank's systems actually go down, that's not just inconvenient, right? That affects people's fundamental access to their money.
Exactly. Operational disruption can literally paralyze essential services, online banking, ATMs, payment processing, even trading platforms. This causes huge inconvenience for millions and, it very quickly erodes confidence. We saw reports in the UK detailing over 803 hours of tech outages. That's across 9 major banks and building societies in just 2 years, including household names like Barclays, Lloyds, TSB, Nationwide, HSBC. That's real-world impact right there.
And that kind of disruption, or worse, a breach, that must absolutely hammer their reputation.
Tremendously, yeah. Trust is, it's the bedrock of the financial industry. It's everything. If customers feel their data isn't secure, or maybe if notifications about breaches get delayed, one source noted a reported 90-day delay in one case that can severely tarnish a bank's integrity, and it can lead to customers just taking their business elsewhere.
Plus, failing to meet those security standards, that invites pretty significant regulatory penalties, doesn't it?
Oh, definitely. Non-compliance can, and often does, result in massive fines. The sources list some really compelling examples. IMED got hit with a $4.5 million fine from the NYDFS for cybersecurity violations. Target, after their big breach, the cost related to PCI DSS non-compliance was estimated around $292 million. Citibank got a $400 million fine from the FAEC for inadequate risk management systems. British Airways faced a $22 million GDPR fine after a breach. Barclays got an $8 million fine from the FCA. And beyond just fines, regulators can actually impose license revocations or operational restrictions. The stakes are just very, very high.
Okay, well, so the why it matters is crystal clear. Given all that, what does the constantly evolving threat landscape actually look like for banks right now? What are the most pressing dangers they're facing?
Well, ransomware. It remains a major and, frankly, growing challenge. This is where attackers encrypt your data and demand payment to unlock it. And the sources really emphasize this. Paying the ransom doesn't guarantee you'll actually get your data back.
Right.
We've seen some really high-profile cases, like the attack that disrupted ICBC USA's operations back in November 2023. Royal Mail in January 2023, that impacted their international services. Loan Depot in January 2024, that cost them nearly $27 million in recovery and exposed Social Security numbers. And then there was that massive Change Healthcare attack in February 2024, affected something like 100 million U.S. healthcare records. The parent company ended up paying a $22 million ransom.
And ransomware itself is getting more sophisticated, isn't it? Like adding data theft into the mix.
It is, yeah. A really significant evolution is what they call double extortion ransomware. So hackers don't just encrypt the data to disrupt things, they also steal sensitive information and then threaten to publish it if the ransom isn't paid.
Oh, wow.
Yeah, so that adds a major reputational risk layer right on top of the operational headache. And we're also seeing ransomware as a service, or RaaS, models emerge, which unfortunately lowers the technical barrier. It makes it easier for less sophisticated criminals to launch these attacks.
Targeting critical infrastructure, that sounds terrifying. You mean the systems that keep the whole financial world actually running?
Exactly that. Attacks aim directly at core components, like payment systems, trading platforms, or, the interbank networks they use to transfer funds. An attack there could have catastrophic consequences for the entire financial system.
Wow.
The U.S. financial services sector, for instance, faced numerous DDoS attacks, distributed denial of service in 2023. Those try to overwhelm systems to cause outages.
And it's not just direct attacks on the bank itself, right? These supply chain vulnerabilities are a huge concern, too.
Absolutely. Exploiting a weak point in a vendor system or a partner system to then pivot and gain access to the bank's network, that's a really common tactic. Dell had that breach affecting, 49 million customers? That came via a vulnerability in a partner account system. Poor data encryption exposed sensitive info on hacker forums. And the Change Healthcare attack we just mentioned, reportedly that originated via a third-party vendor. Shows how one weak link can have these huge cascading effects.
It often feels like, despite all the sophisticated tech, people are still kind of the weakest link in the chain.
Social engineering is still incredibly prevalent.
Yeah.
Phishing remains the most common attack vector targeting banks. It tricks employees, it tricks customers into revealing sensitive info or clicking bad links. Simple, but still really effective. And honestly, just easily usable data that isn't properly encrypted. That's another common threat. If it gets stolen, it's immediately readable. No extra work needed for the hackers.
And with so much critical information moving to the cloud, those cloud-based attacks must be a growing vulnerability area.
They definitely are. Exploiting misconfigurations or vulnerabilities in cloud environments where financial data is stored, that's a significant concern. Plus, you have the more sophisticated stuff like advanced persistent threats, APTs. These are where highly skilled attackers infiltrate systems and just stay hidden for ages, stealing data or setting up for long-term damage. We also see attacks exploiting known software vulnerabilities, like those widespread data breaches exploiting weaknesses in the movie file transfer software just last year in 2024. And this is where examples like that 2017 Shadow Brokers leak fit in. It suggested, suspected nation-state activity, maybe the NSA exploiting vulnerabilities in older Windows versions, possibly even monitoring Swift service bureaus. It just shows that sophisticated actors are constantly hunting for those previously unknown weaknesses, those 0 days.
And despite all the warnings, basic stuff like weak passwords and credentials still persists.
They really do. The importance of strong passwords, unique credentials for everything, proper authentication, it just can't be overstated. That Change Healthcare attack, for example, apparently succeeded partly because multi-factor authentication MFA, needing more than just a password, wasn't being used on the system that got compromised.
Okay, so with that constantly shifting threat landscape and these incredibly high stakes, building a strong defense must feel like a monumental task, maybe even like a Sisyphean task for these institutions. What are the key challenges they actually face?
You're absolutely right. It requires this constant effort trying to balance operational demands with really rigorous security requirements. One major challenge that comes up again and again in the sources is the expertise shortfall and inadequate training. The demand for qualified cybersecurity professionals just massively exceeds the supply. And keeping staff training current, up to date with new threats and technologies, that's incredibly difficult.
And I imagine implementing all these necessary measures isn't cheap either.
No, budget constraints are a significant hurdle. They limit investment in the necessary technologies, in skilled personnel, and that ongoing training we just mentioned. And then on the more basic end, things like weak user credentials and vulnerabilities in mobile devices, they remain persistent, easy targets for criminals.
And navigating that sheer volume and variety of regulations you mentioned earlier, that must be a huge challenge in itself.
Oh, it adds substantial complexity. Trying to streamline compliance across the board is really difficult because different regulations have different, sometimes even conflicting requirements for things like technical testing standards, reporting methods, how long data has to be kept. And this can unfortunately lead to compliance gaps, or it creates inefficiencies as institutions scramble to meet multiple different mandates. Plus, minimizing operational disruptions while you're implementing new security tech, that's a constant balancing act.
Right. And just managing who has access to what across these sprawling, often complex, maybe old legacy systems.
Exactly. Centralized access management is a major challenge. It's complex, it's costly to implement consistently across diverse systems. You've got fragmented legacy stuff, maybe mixed with modern cloud environments. Similarly, achieving detailed auditing capabilities like tracking user sessions in real time or logging every single action, which many regulations require, that puts a huge strain on IT resources. And enforcing that granular access control, like the principle of least privilege, meaning users only get access to exactly what they need for their job, or a full zero trust model, that's incredibly difficult with technology stacks that might have been built up over decades and are really fragmented.
We touched on third parties being a threat vector, but securing them is also a challenge in building your own defense strategy, isn't it?
Absolutely. Securing third parties and vendors remains a critical challenge precisely because they can be the weakest link into your network. It means you need to implement stricter auditing practices for your vendors, maybe even mandate specific endpoint security measures on their systems if they interact with yours. And you probably need to provide specific security training for any vendor staff who access your environment. It's complex.
So let's talk a bit more about those regulations then. It sounds like they're not just, boxes to tick for compliance, but actually a vital part of the security strategy itself.
They really are, yeah. Understanding these regulations is far more than just a legal necessity. The sources we looked at frame it as essentially a blueprint for building a stronger security posture overall. And there's data backing this up. One study found that 70% of companies actually believe that compliance requirements have helped them mature their cybersecurity capabilities.
Interesting. So what are some of the key regulatory frameworks that financial institutions are juggling right now?
Okay, well, in the US, you've got influential state-level models like the NYDFS cybersecurity regulation, sets rigorous standards for institutions in New York, often seen as a kind of model. Then there's PCI DSS, that's mandatory globally for anyone handling cardholder data. The FFIEC provides standards and examination handbooks for federally regulated U.S. institutions and their service providers. And the Gramm-Leach-Bliley Act, GLBA, that's mandatory for U.S. financial institutions, specifically focused on protecting consumer financial data privacy.
Okay. And over in Europe, what are the big ones there?
Well, the big one is GDPR, the General Data Protection Regulation. Protects personal data of EU citizens, no matter where that data is processed globally. There's PSD2, the Revised Payment Service Directive. That enhances security for online payments across the EU, specifically requires strong customer authentication, SCA, for most transactions. And NIS2, which was updated in 2022. That's focused on boosting cybersecurity and resilience across essential services, including finance. It imposes mandatory reporting and supply chain risk assessments.
And the UK has its own version now, post-Brexit.
That's right, yeah. The UK GDPR is tailored for handling UK data specifically. The Financial Conduct Authority, the FCA, they have their own detailed cybersecurity rules for regulated firms. They emphasize robust risk management, governance, operational resilience. And the Bank of England also promotes something called the CBS framework. It's voluntary, but highly recommended for critical institutions. It involves sophisticated threat intelligence-led penetration testing to really assess resilience against advanced attackers.
And are there frameworks specific to, say, Asia-Pacific or that are maybe more global in nature?
Definitely. In Asia-Pacific, you see frameworks like the Monetary Authority of Singapore's Technology Risk Management Guidelines, MAS-TRM, sets comprehensive standards for governance, risk assessment, monitoring. While adherence is voluntary, it's strongly encouraged. In India, the Reserve Bank of India has a mandatory cybersecurity framework setting baseline standards for banks there. And then globally or across the industry, you have things like ISO 27001 and 27002, widely adopted voluntary standards for information security management systems, often required for vendors, actually. The Basel Committee on Banking Supervision, BCBS, provides non-binding but very influential guidelines widely adopted by global banks to enhance operational resilience. And CPMI IOSCO provides voluntary, but again, widely implemented requirements for securing critical financial market infrastructures, things like payment systems and trading platforms.
Wow, that is an incredible array of requirements. It really highlights the complexity of that compliance challenge you mentioned earlier. Just juggling all of that.
It absolutely does. And navigating the variations in testing requirements, reporting methods, data retention rules across all these different frameworks, that is a significant task in itself.
Okay, so faced with these intense, evolving threats and this incredibly complex regulatory landscape, what are the actual actionable strategies banks can employ to build a truly robust security posture? What works?
Well, the sources really underscore that it absolutely requires a proactive approach, multi-layered, thinking about defense in depth, as they say. So the first step is establishing a strong security posture with those layered defenses. This means implementing things like firewalls, intrusion detection and prevention systems, IDPS, robust antivirus and anti-malware solutions, email security, web filtering. Also, network segmentation, basically dividing the network into smaller, isolated zones, and implementing strict access controls based on that principle of least privilege we talked about.
Training staff seems like it just has to be absolutely fundamental here.
It's absolutely crucial, yeah. Comprehensive and ongoing employee training is just non-negotiable. You need to constantly educate staff on how to recognize phishing attempts, understand social engineering tactics, follow general security best practices. And one interesting point from the sources was how empowering customers with knowledge about strong passwords, phishing scams, can actually turn them into an active line of defense, too.
Interesting. And what happens when prevention, despite all the best efforts, fails? You need a fallback, right? A plan B.
That's exactly where backups become key. Maintaining regular, and this is important, offline backups is absolutely critical for recovery, especially from ransomware, right? So you're not forced to pay the attackers. These backups really should be stored off-site and ideally air-gapped, meaning physically disconnected from the network so malware can't spread to them, and they need to be tested regularly. You have to know they'll actually work when disaster strikes.
So like constantly hunting for weaknesses yourself before the bad guys do?
Exactly. Implementing a robust vulnerability management program is essential. This involves regular scanning to find weaknesses, prompt patching of software vulnerabilities as soon as updates are available, and regular penetration testing simulating attacks to find those weaknesses before malicious actors do. Leveraging threat intelligence is also vital. Staying informed about the latest threats, attack tactics, indicators of compromise that others are seeing out there.
And that trust no one approach we hear about sometimes. Zero trust.
That's the core idea behind zero trust architecture, yeah. It means verifying the identity and context of every single access request, doesn't matter where it originates from, and enforcing strong multi-factor authentication and that principle of least privilege access at every single step. No implicit trust.
And looping back to securing those third parties you mentioned earlier, that's a strategy in itself.
It absolutely is. It involves stricter auditing of your vendor's security practices, maybe even requiring endpoint security measures on their systems when they access yours, and providing specific security training to vendor personnel who have any access. Investing in advanced detection and protection tools is also key, leveraging technologies like AI and machine learning to identify unusual or suspicious behavior in real time that traditional signature-based systems might miss.
And for institutions that might struggle with having all that expertise in-house.
Collaboration becomes vital. Partnering with external cybersecurity experts like specialized consulting firms or managed security service providers, MSSPs that can help bridge expertise gaps, it gives access to cutting-edge knowledge and tools they might not have otherwise. And a really valuable strategy highlighted in one source is ethical hacking.
Ethical hacking, so like hiring hackers, but the good kind.
Exactly, white hat hackers. They are security professionals who you hire to simulate attacks against your own systems, with your permission, obviously. The goal is to proactively uncover hidden vulnerabilities before malicious actors can find and exploit them. It's incredibly valuable for finding weaknesses in web applications, network configurations, or even identifying policy issues like systemic weak passwords. The sources do stress, though, the importance of carefully vetting these ethical hackers. You need reputable ones, and often the best approach is combining external ethical hackers with your own knowledgeable in-house security teams. That offers the most comprehensive protection.
Okay, so prevention is clearly the huge focus, but as you said, even with the best defenses, attacks can still happen. What are the core steps to take when prevention fails?
You absolutely need a solid, well-rehearsed incident response plan. The first step is always to immediately isolate the infected systems or affected segments of the network. You have to stop the attack from spreading further. Containment first. Promptly notifying law enforcement and relevant regulators is also critical and, as we discussed, often a legal requirement under many of those regulations.
Right. And what about that really difficult question of paying a ransom, if it comes to that?
Generally, the guidance across the sources and from law enforcement agencies is strongly avoid paying the ransom. For one, it doesn't guarantee you'll actually recover your data. Sometimes they just take the money and run, or the decryption key doesn't work properly. And crucially, it directly funds criminal activity. It just perpetuates the problem for everyone. The priority should always be restoring your systems and data from those regular, tested, offline backups we talked about earlier.
And then afterwards, learning from the whole painful experience.
Absolutely critical. Conducting a thorough post-incident analysis is essential. You have to figure out what happened, identify the root cause of the breach, evaluate how your existing defenses performed, what worked, what didn't, pinpoint the specific vulnerabilities that were exploited, and then, most importantly, implement improvements to prevent similar attacks from happening again in the future.
Okay, we've covered the main threats, the regulations, the challenges, the strategies, but the sources also included a couple of really intriguing, almost kind of bizarre examples that really highlight the complexity of this whole threat landscape.
Yes, there was one that really stood out. This strange case of the so-called Robin Hood hackers. This was the Dark Side group back in 2020. After extorting money from companies, they reportedly donated $10,000 in stolen Bitcoin to charities. Children International, the Water Project. And they actually put out a statement claiming they wanted to make the world a better place.
Wow, that's certainly an unexpected twist on cybercrime.
It really is. And it raised some complex questions, right? Some charities refused the money. It highlighted the challenges experts face in tracing funds when anonymous cryptocurrencies are used. And, the potential for money laundering through seemingly legitimate donations, it just adds this peculiar, almost philosophical angle to the whole thing. And then going back to that shadow brokers leak we touched on earlier, that 2017 event serves as a really stark reminder that threats aren't just coming from criminal gangs looking for profit. The suggestion of suspected nation-state activity, potentially the NSA, as alleged targeting financial systems like SWIFT service bureaus by exploiting previously unknown software vulnerabilities. It just shows the level of sophistication and the diverse motivations behind attacks on the financial sector. It's not just one type of threat.
So, zooming way out from all of this detail, what's the key takeaway here for you, for our listener?
Well, I think it's clear that cybersecurity in finance is it's a complex, incredibly fast-moving battleground. It just demands constant vigilance and adaptation. There's no standing still. As we've kind of unpacked here, securing these institutions requires a deeply proactive, multi-layered strategy. There's no single silver bullet.
Right. It's about combining those robust technological defenses, the layered security, the advanced detection tools, with strict adherence to that really complex web of regulations we talked about.
Exactly. While also implementing rigorous processes like meticulous vendor management and having well-tested incident response plans ready to go. Plus, investing in that ongoing employee training and strategically using testing methods like ethical hacking to stay ahead.
Yeah, it's clear that adapting to these ever-evolving threats isn't just about ticking boxes for compliance or trying to avoid those massive penalties.
No, it's fundamentally about maintaining the stability and the integrity of the entire financial system. And perhaps most importantly, it's about safeguarding the trust that customers place in these institutions, especially in our increasingly digital world. That trust is paramount.
Which leaves us with something to really think about, doesn't it? In this interconnected and constantly digitizing financial world. Where do you, our listener, see the greatest remaining vulnerability? Is it primarily in the underlying technology itself? Is it in the complex, sometimes fragmented web of regulations trying desperately to keep pace? Or perhaps, is it still the unpredictable human element, whether that's an ordinary user just clicking a bad link or a sophisticated attacker finding an unexpected way in through exploiting human behavior?
It's a critical question, isn't it? And definitely one that requires continuous thought and continuous effort from absolutely everyone involved in this space.